First it was Kraft after Unilever, then down low, put some pressure on Nestle, and now we've got Trian going after P&G. What is the broader theme here? These big consumer product companies struggling to find some growth. Why?
Yeah, hi, Jonathan. Yeah, you've really put your finger on the pulse there. That is, these companies, these large consumer product companies, regardless of the sub-industry they're in, are just having difficulty growing. I mean, in the developed markets, population growth is very slow, pricing is very difficult, and their avenue of growth that they saw just a few years ago, the emerging markets, have slowed as well. So it's really come down to a game of mergers and acquisitions, cutting costs, growing by cutting. And if companies that are slow to do so are getting visits by private equity and activists. And so today's announcement at P&G is really just an extension of that.
Well, Ken, we're used to a 1-2% stake in maybe a $10, $20 billion company and some pressure coming that way. These are beasts. These are $200 billion companies. You look at Procter Gamble, $223 billion. I just wonder what they can do to make the likes of Trian happy. If you looked at the response of Unilever, it was a buyback almost immediately. Nestle, the same thing with down low, but it was a buyback. Is that the direction of travel? Can they do anything else?
Well, these big consumer product companies have tremendous amounts of free cash flow. So share buybacks are always on the table. Certainly will be in the case of Procter & Gamble. But I think for the long term, I think companies in the packaged food industry, but as a guide, are all undertaking sweeping cost-cutting programs like zero-based budgeting and footprint realignment. These are the kind of buzzwords and themes that you're seeing all across the packaged food industry to generate long-term margin growth. In terms of the relatively small stake that Trian has in Procter & Gamble, keep in mind, it was only a few years ago that Trian had about a 1% stake in PepsiCo, also a very large by market cap company, that it helped influence quite a bit behind their productivity programs, which are targeting about $1 billion in cost cutting annually. And that has helped support PepsiCo's pretty nice stock run since that time.